Hello and welcome to Capital Market. I am Bisi Adebayo. This week, President Muhammadu Buhari sent the 2020 Finance Bill to the House of Representatives for consideration and passage. The bill proposes various amendments to existing tax laws and financial regulations in response to the negative impact of the COVID-19 pandemic on the economy and the current recession. But the Institute of Chartered Secretaries and Administrators of Nigeria, ICSAN, is calling for a section of the Finance Bill to be expunged to avert the possibility of problems in the capital market and the discouragement of investments in the country's economy. Now, that's the focus of our conversation this evening with the president of ICSAN, Mr. Bode Ayeku, who is right here with us in the studio. Good evening, and thank you for coming on the program today.
Good evening, BC. Good evening, viewers.
All right, now let's begin with you telling us why the Finance Bill 2020, which is currently at the National Assembly, is of interest to your institute.
It's of interest to our institute because we are a stakeholder in Project Nigeria, and we have an obligation to express or make comments on any bill at the National Assembly. Apart from that, the Institute of Chartered Secretaries and Administrators of Nigeria was involved in all the public hearings put in place between 2015 and 2018 before the release of the Nigerian Code of Corporate Governance 2018. Also, ICSAN participated actively during the public hearing of KAMA 2020, and whenever we see any infraction of the provisions of the Nigerian Code of Corporate Governance 2018 and KAMA 2020, and particularly the Constitution of the Federal Republic of Nigeria, Section 44 relating to right to property, we must express our concern so that the authorities can do the right things.
So what is your concern about the Finance Act?
Our concern basically is in respect of Section 39 of the Finance Bill 2020, and this section provides that unclaimed dividends of public listed companies more than 3 years after declaration should be transferred to the Unclaimed Dividend Trust Fund. And apart from that, that Unclaimed Dividend Trust Fund will be managed by the Minister of Finance and also another person appointed by the President, who will be the co-chair on the recommendation of the Minister of Finance. We do not have details of the composition. We only know of the two chairpersons of that particular trust fund. Apart from that, the secretariat of that particular trust fund is domiciled with the Office of the Accountant General of the Federation and Director and Debt Management Office. And both Accountant General of the Federation and Debt Management Office, DG, will be managing the funds in conjunction with the Central Bank of Nigeria. And apart from that, it's required of all public listed companies. Despite the fact that they will transfer this unclaimed dividend to Accountant General's office, that they will still continue to render returns to the Accountant General's office, which is a new requirement. And if any shareholder should come up, that is a shareholder having unclaimed dividend after 4 years or 3 years of declaration, then the approval of the minister is required before such money will be paid to the appropriate shareholder. In addition to that, we now find a very strange provision that says that if a dividend is unclaimed after 12 years, that dividend will lapse into the revenue of the Federal Republic of Nigeria. We find that extremely strange. Strange in the sense that unclaimed dividend or dividend generally belongs to shareholders, those who invested in this particular funds. Government has no investment in these particular shares as to warrant government taking over the unclaimed dividend of the shareholders. And we consider this as an infraction of the provisions of Section 44 of the 1999 Constitution that guarantees the right to property of every individual, including the shareholders. And the right to dividend is the right of the shareholder. So if government is now saying after 12 years, you forfeit your dividend, it's a penalty. And what makes it extremely strange is that from this profit that the public listed companies have declared, government have collected 42% of it. They collected 30% in form of corporate tax, 2% in form of education tax, 10% in form of withholding tax. Government is now saying the remaining 58% that they will still collect this money. And we find it extremely strange. And the reason is this: there is a wrong assumption that unclaimed dividend funds have no owners. It's a wrong assumption. The owners of this unclaimed dividend, they are Nigerians. They are around. Their dependents are around if they are deceased. It's just for us to trace them so that we can assist them to claim their money. So it's not as if the money is abandoned, nobody is willing to get the money. There are bottlenecks, and government is aware of the bottleneck. And that why we are specifically concerned is this: in the entire Section 39 of the Finance Bill 2020, there is no mention of what the government intends to do to assist the poor shareholders to access their unclaimed dividend. The only thing you find is that how the money will now lapse into the revenue of the government. Yes, we know government is desperate to get money, but shareholders are extremely poor and they deserve palliatives from the government, and it should not be the other way around, whereby shareholders will be giving palliatives to the government. And that is why we are concerned that the relevant authorities, they should do the needful to avert unpleasant consequences that will arise if they should allow this particular section 39 to be part of this particular bill.
And when we're talking about unclaimed dividends now, you say that you trace them, but how easy is it to actually trace the owners of these unclaimed dividends? Data is always an issue.
Tracing is one issue. The major problem with unclaimed dividend in Nigeria is the probate system we have. The probate system we have in Nigeria, that is when a person is deceased, how the dependent will assess whatever belongs to him, is complex, exploitative, unfair, and is such that you can describe it as punitive. And let me give you a very simple example. If you have two civil servants, Peter and John, assuming they invest in a particular public listed company, 100,000 each, and the public listed company declares a dividend of 13,000 in favor of each of them, government will take 10% of that. So the company will now pay net of the withholding tax 9,000 each to their bank accounts. Assuming Peter is able to collect his own money from the bank account, 9,000. Let's now assume John, in the process of going to the bank to collect the money, maybe was hit by Okada and he died in the process. Now, for the dependents of John to access the 9,000, government will still collect additional 10%. So the 9,000 that is in the account will be reduced to 8,100. Apart from that 10%, which is punitive, government will now say, okay, what was the value of the shares? He invested 100,000. Government will now collect additional 10% on the value of the shares. You ask yourself, is the government now penalizing the deceased or the dependents? Whereas Peter, who is still alive, collects 9,000, his investment of 100,000 is still intact. Now, this particular deceased person's interest, that is, the dividend has declined from 9,000 to 8,100. The principal which he invested, the capital appreciation on that particular investment, the 100,000, has now been reduced to 90,000 naira. So you find double punishment, and that is why the government must be interested and in talking to all the 36 states of the federation, the high courts, the probate registry in all the 36 states, to say we must remove this 10% valuation of the assets of deceased, because the immediate concern of any deceased family is how do we bury, how do we take care of the dependents. But when those people are now being forced to look for money to pay 10% to in form of whatever is in the bank account, 10% in terms of the value of the assets of the person, those people will abandon it. That is why we have a lot of unclaimed dividend in our pool as at now, because the dependents, their immediate priority is how do we fend for ourselves. The house they are living, government is asking them to pay 10% of the value of the house, despite the fact that they are not selling the house. And that is why the government must show interest. Demystify this particular probate system that is breeding corruption. Because what happens is that in the process of doing the valuation, the officers will say, okay, this is what the regulation says. You have to pay because, for example, in some areas, they've designated the value of any property here is not less than 50 million. So they have to negotiate. In the process of negotiating with people, you know what it involves. Negotiation brings in corruption. So government must show interest to find a way to make whatever fee that will be charged for processing letters of administration probate should be a nominal fee at the maximum of 5,000 naira. Because the money that goes into the account, in most cases, the owner of that account has paid tax on it. If he is a civil servant, it's the net amount that goes into that particular money is the net after reduction of tax. When you now have the dependents to pay 10% to access what is in the bank account, to pay 10% in respect of the assets of that particular disease, is punitive. And that is why we have a big chunk of the... In fact, there is no family in Nigeria that will not have somebody who has interest in this particular unclaimed dividend. They know that it's there. But the question is this: I have 10,000 naira to fend for myself. Should I waste that 10,000 naira to pursue a probate that I don't even know when it will be out? So that is the problem. And that's why we are saying government should focus on the root causes of this particular problem. I know SEC is trying. They initiated this e-dividend payment system, but there is room for improvement because they still need to further simplify the e-dividend payment system so that when you fill a form, you can use that same form to access all your dividends. And we have recommended to the government and also to the authorities, going forward, we should have a way whereby when you apply for shares in the application form, there is a provision for default beneficiary, so that when anything happens to the original owner, the money is paid directly to the default beneficiary, so that nothing will be left there. You know, it's so pathetic that we have this huge amount of unclaimed dividend. We are talking of 200 billion now, and we know it's more than the budget of some states in Nigeria. And we have a lot of poor people. They are poor, they cannot send their children to school. The dependents, they cannot fend for themselves. The money is there, they know that the money is there, but because they cannot afford the money in order to get the letters of arbitration or the probate, they just abandon it there. And that is why government needs to sit down, call all the attorney generals of the federation together, including the FCT person, to say, let's address this problem. We must review this law because it's punitive. It's like punishing the dead. It's only in the villages you have such a custom whereby if a person dies, you need to punish the dependent. But government is doing exactly the same thing, and that is why we are saying it is wrong. And specifically, it is wrong for the government to take over funds, private funds, not public funds. Government has collected 42%. There is no reason on earth why government should be interested in the
But has your association, your institute, rather taking any steps?
We have taken concrete steps. We sent our position paper to the National Assembly because we know the bill is before the National Assembly. Apart from that, we had our annual conference on the 19th of November. And in the opening address that I read on behalf of the institute, were detailed out, and also it was well publicized in all the media so that we sensitize people. And apart from that, what we are doing here is also enlightenment. But the issue is the major issue, and that is why our institute is concerned, is the capital market. This provision, if there is any slip and it's allowed to stay, it will affect the capital market drastically. And the reason is very simple. The listed company, because this bill is targeted at listed company, what they will just do is that they will just delist. And the reason why they will delist is very simple. Shareholders have been raising their concerns on pages of newspapers. If you check almost on a daily basis, you see their concern being expressed. So one thing that is certain is that the shareholders and the shareholders association, they will file court actions against the company, against the government, and they will join the companies if this particular provision is in place, because they are complaining that it amounts to expropriation. Apart from that, this reporting to Accountant General's office, you know, private sector and public sector, they are two different sectors, and the orientations, basically, they are not the same. So the companies will look at it that why should we have this additional burden? And apart from that, what happens is that since we are talking in this bill, they talk about revenue of the government, various committees of the National Assembly will start asking listed companies to render one returns to them in order to be sure that they've remitted or claimed it. And no company under this present dispensation, the challenges before the companies are so enormous that they want to add any distraction of traveling to Abuja, photocopying 60 copies to the National Assembly to defend something that they have no interest. Because of that, what they will just do is that they will delist. When they delist, who are the casualties? The registrars. They will first sack the registrars. Because when they delist, they will not stay as public company again. They will just re-register as a private company. The dividend that is being shared currently, for example, if a company has 60,000 shareholders, they share the dividend among the 60,000 shareholders. By the time they re-register as private company, it will only be shared by 50 people. So poverty level will just increase in the process, and that is not fair. And apart from that, what will then happen? That we have a lot of stakeholders in the ecosystem, in the capital market. Government is a stakeholder. For every transaction on the floor of the exchange, government collects VAT, government collects stamp duty. Stamp duty will also increase as from Monday from 0.075% to 0.08%. As from Monday, government collects VAT, SEC collects 0.03% on every transaction, stock exchange collects 0.03%, CSCS collects 0.03%. Brokers, that's what they do for a living. They collect their brokerage. So if they delist, they withdraw those shares. Those shares will no longer be available for trading, and because of that, the brokers will lose, the CSCS will lose, the stock exchange will lose, government will lose, and a whole lot of people in the process. And apart from that, our major concerns basically will be in respect of the shareholders. A lot of those investors in shares, they are older people. Majority of them are retirees, where they can be sure that they get a regular source of income is from dividend. And if you take away this, you know, the retirees, they hardly get their money or their salaries as at when due. They rely on this to augment their, at least to make ends meet. By the time they take, these companies are delisted, this source of income permanently will be disabled. So it will create additional bottleneck for them. And you now ask yourself the question, why are we having this? Apart from that, in the capital market, the Nigerian stock exchange, the capitalization is increasing now. After COVID, they are just getting over it. Now, by the time you withdraw a share, large share of shares from the capital market, the market capitalization will also decline. And you observe in the last 3 years, how many new companies have listed? Companies are not listed because there is no reason for it. There are other sources of getting revenue, and that is why we are saying that we need not create another shock for the capital market.
All right, I know we could go on and on, but time will not permit us to go beyond this point. The president of the Institute of Chartered Secretaries and Administrators of Nigeria, Mr. Bode Ayeku, thank you for coming on the program tonight.
Thank you.
During the week, the Central Bank of Nigeria published several circulars around the foreign exchange and the liquidity of the bank, saying that it intends to introduce special bills as part of efforts to deepen the financial markets and avail the monetary authority with an additional liquidity management tool. Now, according to the CBN, this is another attempt to achieve the dual objective of managing system liquidity and supporting money flows to the real sector without injecting fresh liquidity. The head of research at United Capital, Wale Olusi, joins us now to discuss the implications of this policy on the markets. Good evening, Wale. Thank you for joining us. Now, tell us, what are your thoughts about the policy relating to the introduction of the CBN special bills?
Well, thank you for having me, BC. It's nice to have you again. Well, I think the idea behind the CBN special bill is clear. Banks have been debited much more than the 27.5% CRR before now. So central bank is looking at how to return those excess reserve back to the banks, and they are doing that by giving them a special bill, something like a treasury bills or a promissory note, which can be discounted, by this bank and for cash in the secondary debt market, maybe the NTB market. So I think it will improve the liquidity of the bank. It will also create, some outlet for the huge liquidity in the hands of the non-bank financial institutions.
Now, but what effect is this policy likely to have on investors in the treasury bills market?
Well, I mean, we've seen, a kind of, people are waiting. There's an uncertainty around the amount, the yield or the rate at which, the central bank will discount this special bill with the bank. People want to know if it's going to lead to a retracement in the yield environment that has been very low. But we beg to differ. We think if it's a 90 days bill, it can't be too far from what NTB is doing. If NTB is about 10 bips or 15 bips based on what we saw at the last auction, whatever rate that will be, it won't be different. So beyond creating an additional outlet for funds, we don't see it having a significant impact on yield in the market.
But do you expect this initiative to release the excess CRR to fuel inflation in the economy?
Well, to be honest with you, we've dissected it. Inflation is caused by about three factors. There's the cost push, there's the demand push, and then there are the structural issues. Issues around border closure, issues around FX volatility, issues around flooding, as well as banditry, insecurity in the north, are part of the, factors responsible for inflation, which are mostly cost push or structural issues. The only bits where you can take CBN up on that is the liquidity in the system. We don't think this is going to, worsen inflation. We think inflation is already on the high, considering the, variety of policies from government, including, fuel subsidy removal that has increased PMS price to about 163 now, as well as electricity charges, among others.
So what rates do you think the CBN will issue these special bills? Do you think that the rate will be higher than the current near zero yields?
Well, like I said, we don't think it's going to be too far away from the benchmark treasury bills of 90 days. If that's going for 0.15%, we don't think the special bill, if it's going to be a 90-day bill as well, because it's also a discounted instrument, which makes it effectively a treasury bill. It's going to be maybe around 30, maybe 1% at best. We issued a CP recently and we did 1.26%. Central bank is almost like federal government. We don't see them doing up to what a corporate would do. So it's
But
going to be less than that.
But would you see this having any form of effect on the stock markets now due to possible higher yields? We know that the stock markets has been some sort of safe haven for investors in recent times.
Well, I mean, for stock market, we don't expect much change. Like I said, 1%, 2% treasury bills is still nothing compared to the dividend yield that the stock market is offering. If you buy a Zenith at 23 today, and Zenith pays, 2 naira or 2 naira 50 kobo by February next year, you are doing a dividend yield of about 10% or 11%, as the case may be. Compare that to 2% or 1% or 15 bips. It's a no-brainer. I don't think it will change, the sentiment for stocks. The fixed income market need to go back to the level it was of around 12% before we'll see it significantly, changing the dynamics in the stock market. Maybe when central bank starts tightening, then we'll see sentiment change for stocks.
All right, Wale, let me ask you now. United Capital just launched a Sukuk fund. So can you tell us what impact this is going to have on the market?
Yeah, thank you for that. Again, this is also, speaking to the fact that the investing community is looking for alternatives in terms of investment. And what we are doing with the Sukuk fund is to also create that alternative. The last Sukuk bond raised by federal government was, done at a coupon of about 11%, which is significantly higher compared to the equivalent bond. So we think investors will jump at, any decent investment that is secure, that is SEC regulated, and I can return something, double digit. That's why we are doing it. So we think it's an alternative, especially for those investors who are being ethical. Some of them who, want to invest in things that are halal, or ethical. So, that's the advantage. And the Sukuk space is a space that has been growing, and, the funds are tied to projects, and, it's a veritable source of investment for government to fund the myriad of infrastructure in Nigeria. This is an opportunity for investors to also take advantage of that and earn, something much more higher compared to what your bond. Average bond yield is about 4-5% at the moment, but the Sukuk can still give you something, higher. And that's what we are trying to, make our own clients as well as prospects take advantage of in this low yield environment.
I'd like to thank you, Head of Research at United Capital, Wale Olusi. Thank you for sharing some of your time with us this evening.
Thank you for having me. Good evening.
And that's where we round up today's program. Thank you for watching. I am Bisi Adebayo.